duality, double entry, and the accounting equation. Transactions occur. Effects recorded in ledger accounts. Ledger accounts balanced off. Trial balance. Year-end adjustments made and ledger accounts closed off. Financial statements. Each transaction that a business enters into affects the financial statements in two ways. Duality concept. For example, a business buys a machinery for cash. The two effects on the business are: Number 1. It has increased the assets it has at its disposal for generating income. And number 2. There is a decrease in cash available to the business. To follow the rules of double entry bookkeeping, each time a transaction is recorded, both effects must be taken into account. These two effects are equal and opposite, and, as such, the accounting equation will always be maintained. The accounting equation. Assets is equal to equity plus liabilities. Assets minus liabilities is equal to equity. The financial position of a company at a point in time is depicted in the statement of financial position. The accounting equation will always be satisfied by a statement of financial position. The accounting equation is a straightforward expression of the idea that a company's assets will, at any given time, be equal to its liabilities plus equity. Let us look into some transactions and discuss how they satisfy the accounting equation. Number 1. Aaron commenced business introducing $2,000 cash. Number 2. Bought a motor car for $400 cash. Number 3. Obtained a $1,000 loan. Number 4. Purchased goods for $300 cash. Position of the business at the end of each transaction is as follows. Number 1. Evan commenced business introducing $2,000 cash. The dual effect of this transaction is: A. The business has $2,000 of cash. B. The business owes the owner $2,000. This is capital or equity. Assets is equal to equity plus liabilities. 2,000 is equal to 2,000 plus 0. Number 2. Bought a motor car for $600 cash. The dual effect of this transaction is: A. The business has an asset of $600. B. The business has spent $600 in cash. This transaction changes the form in which the assets are held. Assets is equal to equity plus liabilities. 2,000 is equal to 2,000 plus 0. 600 minus 600, 0 plus 0. Number 3. Obtained a $1,500 loan. The dual effect of this transaction is: A. The business has $1,500 of cash. B. The business owes $1,500 to the bank. Assets is equal to equity plus liabilities. 1,000 is equal to 1,000 plus 0. 1,500 is equal to 0 plus 1,500. Number 4. Purchased goods for $500 cash. The purchase represents the recognition of a new asset, inventory, and a corresponding reduction in the bank account. so there is no change in the accounting equation. Assets is equal to equity plus liabilities. 2000 is equal to 1000 plus 1000. 500 minus 500 is equal to 0 plus 0. Ledger accounts, debits and credits. Transactions and events are eventually recorded in the relevant ledger accounts using a double entry to reflect the duality concept. There is a ledger account for each asset, liability, equity, income, and expense item. Traditionally, each account was drawn as an enlarged T that has two sides, a debit and a credit side. Let us look into a pro forma. The duality concept means that each transaction will affect at least two ledger accounts. One account will be debited and the other credited. Decision criteria: whether to debit or credit an account. Whether an entry is to the debit or credit side of an account depends on the type of account and the transaction. Debit: increase in purchases, expenses, assets. Credit: increase in revenues, liabilities, shareholders' equity. It is important to note that the opposite is also true. For example, a reduction in liability would constitute a debit entry into the ledgers. Summary of steps to record a transaction. Step 1. Identify the ledger accounts that are affected. Step 2. Consider whether the account balances are being increased or decreased. Step 3. Decide whether each account should be debited or credited. Step 4. Check that a debit entry and a credit entry have been made and they are both for the same amount.